Hi, I'm Michael Flight with Liberty Real Estate Fund, and I'm here with my partner, Jason Ricks. And Jason and I are going to talk a little bit about the benefits of net lease properties and Liberty Real Estate Fund, the world's first net lease property security token fund. And we are going to get covering all of that stuff. So Jason, why are you interested and excited about net lease properties?
Oh, they're a fantastic product. They're always in extremely high demand, and these properties are located on major corners and thoroughfares. So think of a CVS on a corner with great visibility or a Starbucks drive-through.
And so what you're telling me is these are like boxes, with like billboard boxes. So that's just like, brand name visibility type of thing.
At the best corners in the town, Michael.
Okay.
Yeah, with the most traffic on the streets next to them.
All right. And what is unique about, like, let's say somebody's doing apartment investing or mobile home park investing. What's unique about net lease properties in terms of that?
It's the lease structure itself. It's a triple net lease structure. And so these retailers are responsible for their taxes, insurance, and common area maintenance.
So what you're telling me is you don't have to deal with tenants, toilets, or taxes.
No calls at night for the toilet, no calls for a roof repair. All of that is covered by the retailer in the lease structure.
Okay. And are they maintenance intensive, or tell me a little bit about, why the tenants, do this and something about, that?
They want to have control over their space within the marketplace. So they actually prefer, they've got, again, these are large corporations, Michael. So they have national vendor relationships that can come in and do it probably more efficiently and quickly for their business than you and I could manage.
Okay. And what I know from net leases is that they have long-term leases. So, I mean, historically, what you're talking about is they have these long-term stable occupancies. So why don't you tell us a little bit about the occupancy chart?
That's 100% correct. And they want to have control over these key corners for multiple years into the future. And so they usually want to sign something for about 10 to 20 years in term and have renewal options in there as well. So they can maintain that corner and visibility for their customer.
So why don't you tell us a little bit about the stability and occupancy and all the rest of that and why net leases are unique?
Yeah, absolutely. So this particular subset of retail has the highest historical occupancy compared to other asset classes and niches. So when you look at historical data, and again, we've gone back into like the early 80s, Michael, on this and done research. Single tenant net lease properties historically have been around the 97 to 98% occupancy range. Now, when you compare that to other asset classes, they're the clear leader.
And how do they do in a recession? Because that's always the biggest thing. So tell me about that.
Look at the data based on the tenants that were interested for this fund. They've actually performed better during COVID, and they are internet resistant.
And let's talk a little bit about the brand names, the corporations behind them, and all the rest of that stuff.
These are multi-billion-dollar corporations. These are credit-based tenants. If you look at the bond yields today for some of these credit tenants, they are below 3%. So you've got negative real returns, Michael. Negative.
But we're talking about, so, what kind of type of brand names are we talking about, and what type of geographic area are we talking about?
Yeah, absolutely. We're talking about, for the medical side, we're talking about Fresenius, Aspen Dental. We're looking at ExxonMobil. We're looking at Goodyear, Firestone, all $10 billion and up companies, what we call through the smile states of the United States.
Why don't you show us? I think we got a graph.
Yeah, let's go to that.
So the smile states are what I like to call swarm to warm. So people are leaving Illinois, New York, those places in droves, and they're coming down to Texas, Florida, and all the rest of it. Tell us a little bit about, just a hint of like the dynamic growth in Texas or some of these other states and why it's happening.
Well, look at the growth over the last decade, Michael, especially my hometown in Austin, where we're getting continued venture capital into Austin. And the growth of the city is just exploding. Not only Austin, but Dallas and in Houston as well.
Yeah, and I think what is really driving growth is low taxes. Texas has no personal income tax and no corporate state income tax. Florida has no personal income tax. Nevada has no personal income tax. So all these things are like just driving growth. So people are coming down here, but the biggest thing is industry is moving into these areas. and it's driving population growth, which is actually increasing the sales and increasing the beneficial stuff. And the other thing that I really like about these states is there's usually lower regulation states. Yeah. So they encourage building, they encourage growth. So why don't you tell us a little bit more about some of the other things, like what's really great about net lease properties?
Sure. So the specific asset classes that we're going after, we're looking at dollar stores, like everyday needs, right? Essential businesses. We're looking at drug stores, pharmacies. We're looking at medical, so you got to go to a dentist. Unfortunately, if you have kidney issues, you're going to have to go to a dialysis center. Everyone has a car, is going to have to get their oil changed and tires replaced, things like that, and essentially gas stations. So all of these uses are set up for success in today's climate with internet competing against retail and sales and a post-COVID world.
And the thing I really like about these tenants is these are billion and sometimes trillion-dollar tenants. So when you're looking at 7-Eleven, that's $1 billion tenant. And you're looking at Shell Oil Company, so like Jiffy Lube is actually owned by Shell Oil Company. Those are $1 billion tenants. You know that the rent is going to be there each and every month.
100% correct. And at the worst case scenario, Michael, let's say they fail on their rent, you have a great piece of real estate. You're land covered. Yeah. And you're going to be in a high demand with the highest occupancy range compared to any other asset class.
That's the biggest thing that I love about real estate. And so when I talk to my friends in cryptocurrency, I said, this is a great idea, but it really sounds like it's something that's just like a software. Why can't I get a tangible asset? Which is why Jason and I started trying to figure out how we could do something to create liquidity, to create extra investor optionality. And so why don't you talk a little bit about the security token portion of our offering?
This is the most exciting part, and it's revolutionary because the biggest issue folks have in private real estate investment is the illiquidity. Once you're connected to one of these private investments, you are married to that general partner, Michael.
I always tell the story about my mother. My father invested in 1982 in a hotel deal.
That's right.
The thing is just going bankrupt this year. So she's not been able to get out of it, and it's never made any money.
So that's a great story. What if she could actually sell her equity in that deal? Would she like that? Would any investor like that? And I pose that question to everyone, and 100% it's been yes. If they could liquidate their position at their choosing and give them more control, every investor will choose that.
The other thing is that for an investor like myself, if I bought $100,000 worth of tokens here and they were $10,000 a piece, I could give a 20% to one of my sons, 20% to my other son, and retain the rest. If I had 3 sons, it'd be 60%. I keep the 40%. So it's great for estate planning. It's also great for complete transparency and issues with record keeping and all the rest of it. Because people ask me all the time, and they're like, well, is it like Bitcoin where if you lose your wallet or something like that, is it lost forever? Like, no, these are security tokens. So with security tokens, you can go back and reissue them. There's, of course, the necessary safeguards and things, but these can be reissued, they can be found, and there's a record of them on the blockchain, which is an immutable blockchain. So that's what we really like about it.
Just creating essentially the best optionality for investors that I've seen in the marketplace.
Yeah. So what are some of the key takeaways?
Again, you have one of the largest illiquid asset classes in the world. Through our fund, we are trying to find liquidity through the Liberty token, which is fantastic. You're dealing with single-tenant net lease properties that have the highest occupancy, historically backdated. We're working with essential businesses, Michael, and the yields speak for themselves on top of having the corporate credit that we mentioned earlier.
And there's one thing we forgot to talk about, which is our experience. We've been in business for 30 years. We've done these type of properties for years and years and years. We have a deep team. We have a team that have worked for institutional investors, real estate investment trusts, private equity firms. So we've got a deep team. We know what we're doing, and we love real estate. So I'm just going to tell you, we are not a technology company. We've got technology providers, but we wanted to put together the best real estate fund possible that gives you the safest monthly income, monthly returns, passive investment.
Absolutely right. And we serve two key constituents. It's going to be our investors first and foremost, and our tenants. We want great relationships with both. And that's what we strive for.
We thank you very much for Liberty Fund. I'm Michael Flight, and this has been Jason Ricks.